Ladies and gentlemen, a frustrating couple of days in the market. A lot of gains being lost here on the Bitcoin chart. A lot of gains being lost on Ethereum. In fact, a devastating fake out on Ethereum. We had the Ethereum chart in a massive triangle formation stemming backwards from November. We broke that triangle formation with the RSI validation, with the volume surge of the breakout. I mean, it was a textbook breakout. And it just rolled over. I mean, for some reason I can't identify, it just rolled over at local resistance. Bitcoin failed to break out. We saw some changes in traditional markets, some shifts in expectations for the next FOMC meeting, for the next interest rates meeting. And it just led the breakout to essentially diffuse or fizzle out. And it was quite unfortunate. So failed breakout there across the market just yesterday. And now the question is, well, after a failed breakout like that, what do we do? Do we go down here? Are we starting to resemble something like the 2021 all-time high? Are we starting to resemble something like a double top formation? Or is that not too concerning? Is it something like back here in the middle of 2023 where we saw what looked like a double top formation, went down again, but just didn't break down and actually went upwards? Well, in this video, I really want to bring your attention not only to the macro, but also to the short term. The importance of the short-term level at 97,000, what that means, how that divides the range. But I also importantly want to bring your attention to the macro economy, okay? Why is Bitcoin taking so long to make a decision here? Why have we been going sideways for about 100 days? You know, not quite 100 days, but close to 100 days here. That's much more than usual. Usually, bull market corrections last about a month or under a month. So why is Bitcoin taking so long here? Well, it's to do with changes in interest rates expectations. It's not necessarily a bad thing. In fact, I remain macro bullish on Bitcoin. I don't think the macro's changed here. I think this is a justifiable delay at this point in time. Could that change? Yes, it could. We'll discuss how it could change, and we'll discuss everything today. So let's get into it. Before we do so, check out the Bitcoin exchange. It's global, non-KYC. You can access it from anywhere in the world with just an email address and a password. It takes literally 15 seconds to sign up because you don't need to link your identity to the exchange. You can literally be anonymous on this exchange. You can also choose to link your identity voluntarily if you wish to do so for whatever reason. It's got very low trading fees, hundreds of trading pairs, never been hacked before. And with my referral link down below, you can get a 15% trading fee discount attached to your account for life. Check on the screen here real quick. If you sign up on the bottom left of the screen with my referral link, you'll get that 5,500 USDT reward bonus or access to it at least. An alternative option for you guys is the BitGet exchange, a recognized exchange, top 5 in trading volume consistently. Very good liquidity on this exchange as well. You've probably heard of it. It's not available to people from the USA, but it is available everywhere else. So check that out if you're interested as well. Take your pick. The links are down below. 15% trading fee discounts available either way. Let's get into the content here. Right, so this is really the big question right now, right? We've got the Bitcoin chart right here. We've been consolidating the same price region for about 2 months now, over 2 months, right? It's going on 3 months at this point. Very long consolidation, a lot longer than usual, actually. If we look at the prior bull markets, for example, so we've been consolidating for about 100 days. We look at, what's happening in corrections, historically speaking. They usually last about a month, not 2 months, and certainly not 3 months, okay? So this is a very, very long correction. Very, very long consolidation. It's not necessarily a correction because we haven't actually seen a structural breakdown, a macro breakdown, although we have corrected quite a bit. It's not necessarily a correction in the traditional sense of the word because, again, there's no structural breakdown. But why have we seen consolidation lasting this long? Well, I can pin it to one simple reason. I think it's to do with the interest rates, okay? We thought that interest rates, and the market broadly speaking thought that interest rates were going to drop much sooner than they actually have ended up happening. We're actually seeing rate cuts kicked back to later in the year, okay? Months away from now, in some cases, a couple of months away from now. We were expecting rates to start cutting basically in the first FOMC meeting at 2025, if not in 2024, or cutting more aggressively than they have been already. And the fact that that's been kicked down the road just recently has led to a shift in the perceived risk of the market. And obviously, rates going down is bad for the DXY and hence good for markets in general. It means money's coming in to the economy. It means they're printing in most cases. And that stimulates markets, stimulates financial markets, and makes people much more bullish in financial markets and much more, the opposite of risk averse. They take risk when they see the FOMC going into quantitative easing, the Federal Reserve going into quantitative easing. And the fact that that's been kicked down the road means that people have not been willing to take that risk just yet. They're waiting a little bit. And this has led to consolidation, not only on the Bitcoin charts, but also cryptocurrency as a whole, and also on the S&P 500. You can see the S&P 500, much like Bitcoin, since November, again, much like Bitcoin, pretty much just going sideways, holding onto key levels, holding onto the bull market support band, for example, not really breaking down either, holding onto a wedge, breaking to the upside, but more or less just going sideways. So it's the entire, it's the entire markets. It's not just cryptocurrency, it's traditional markets as well. It's a market-wide thing that's happening right here. We're seeing a stagnation, a slowdown, and it doesn't necessarily mean there's damage to the macro structure. That's the main key point. Just because we're seeing this consolidation with strange price action doesn't necessarily mean the macro structure is damaged. It just means that something's shifting here, okay? And we can see that very clearly just by looking at where the Bitcoin macro range is. So the Bitcoin macro range is not actually horizontal here. It stems back from diagonal lines of price cycles. So we look at the 2017 bull market. We look at the peak there. We've got an orange line stemming through the peaks of 2021 right through to where we are right now. We can see two clear resistance retests. That forms the top part of this macro range. And the bottom part of the macro range stems backwards from 2021, strictly speaking, from the two tops in 2021. As you can see, I've circled them. And it cuts right through the lows right here. And you can see that is the bottom part of the macro range. So the resistance and support stem back cyclically. They're very important levels stemming backwards from 2017 and 2021. So years in the past they stem back from, and they're being respected very strictly right now. And they're not broken, right? Nor, the resistance, nor the support. We're just ranging. So nothing's actually changed here on the macro, and therefore nothing bearish has happened. We've just seen a delay. That's all this really is at this point in time. Now, if we break down, if we start breaking this yellow line, for example, that's when it becomes more serious. That's when it becomes a more serious threat. This is supported by this line stemming way back from 2011, the biggest line you can find in the Bitcoin charts, being respected over and over again on a macro scale. You can see the interactions being respected over and over again. A very, very valid line here, acting as resistance and support for a long period of time, being bounced off down here just a couple of weeks ago. And again, we're above that level. Now, if we drop below that level, that's when problems start to emerge. But right now, we're still above that level. So there's no actual structured macro breakdown here. Yes, Ethereum's failed to break out. That was a fizzled out breakout. We saw the same thing on Bitcoin. Yes, Bitcoin is edging downwards. It's slanting downwards here. It's not really that great to see. But if we look at the Bitcoin charts objectively here, we look at the 4-hourly chart on Bitcoin, we bring up the volume profile, for example. What we see is the volume profile still shows we have major support below. We have major support specifically at 97,000. If we start dropping below 97,000, that's when it gets a bit dodgy on short term, because that's when we start ramping up the drop. And that's when we start looking at the major support as kind of one of our more, important support levels it needs to hold. We start losing that. That's when real damage is done. But right now, we're not even below 97,000. So that's actually not a really terrible position for short term to be in. We're actually not even really in a bad position on short term yet. And hopefully we don't end up in that point. My concern right here is we do have a rounding top formation. So we'll have to see how it goes in the next couple of days here. But right now, as we speak, the short term's actually intact. Even though we saw the failed breakout on Ethereum, the short term's intact because Bitcoin's above the POC, the main point on the volume profile of the range. The major support zone of the range is still above. We're in the top half of the range here. And so we're still technically angled to attack resistance rather than attack support, which is a good sign. But most importantly, it's just the macro being intact. That means I'm not really going to shift my opinions here. There's no point shifting my stances when the macro is intact, of course. There are threats, and that's for sure. And look, we wouldn't be in a 3-month consolidation if there weren't. But there's two ways you can frame it. You can frame it from an optimistic perspective or from a pessimistic perspective. I mean, for me personally, we've even given the slowdown in interest rates and the expectations for interest rates, 3 months consolidation here, you can view that and say, 3 months of consolidation, this is really, really bad, we're going to crash. Or you can say, wow, it's been 3 months without any major bullish news, and the market's still held its ground on support. And it's held its ground on support even throughout strenuous retests through an entire month of December and January, and it's still above where it needs to be. So, there's the optimistic perspective, there's a pessimistic perspective. The reality is, the objective truth is, regardless of bias, nothing's really changed here on macro. Even going into, what we can look at for fractals from prior cycles, speaking of cyclical lines, we can go ahead and take a fractal from late 2021, the all-time high in 2021. We can see we had this double top formation with the second peak being slightly higher before a breakdown in the end of the bull market. And you can look at the charts right now and you can say, oh, look, that's exactly what's happening. A first top right here, slightly higher on the second one, breakdown, end of the bull market. You can be pessimistic about it. Or you can just as easily go back and get a fractal from 2023 right here. We had a first peak right here. Second peak went slightly higher and we went right back down to support, but we didn't break down. We actually went upwards and skyrocketed. So that could happen as well. It just depends on how you view it. Depends on whether you're optimistic, pessimistic. on this situation based on your thoughts on the, for example, the 4-year cycle, things like that. For me personally, I'm macro bullish on Bitcoin until proven otherwise. We're in a macro upwards trend. So let's just keep it simple. Until the macro breaks down, why would we change our minds here? So for me personally, macro is the be all end all. But obviously that doesn't mean I can't pay it. I shouldn't just zone out of the short term. Of course, no one should. We need to pay attention to the short term as well. And right now, it's very clear to me that the most important short term level is, just objectively speaking, 97,000. That is the POC and the volume profile. That's where the most historical trading volume has taken place in this range. And given the fact that we're above that level right now, I don't actually see immediate cause for concern. I see cause for disappointment and frustration given the failed Ethereum breakout and the fact we had an opportunity we missed, but no actual immediate concern here. So those are my takes on the market right now. Sorry for the sloppy delivery today, guys. It's very late at night here. Haven't had much time to film today, but I hope you appreciate it regardless. If you did, please leave a like, comment, and subscribe so you don't miss future updates. And of course, check out the exchanges once more. 15 seconds to sign up here on Bit2Nix. It's global non-KYC. You can sign up with just an email address and a password. A 15% trading fee discount available with that referral link down below. The exact same referral link discount available on BitGet if you want an alternative option. And you're not from the USA. You can sign up from this exchange anywhere except for the USA. It's top 5 trading volume, very low liquidity issues, very high liquidity, I should say. It's got very minimal issues with liquidity, which is a great thing in trading. You need that. So take your picks, guys. The links are down below, and I'll finally mention the VIP group on Telegram where we trade altcoins 4 times a week. I post the altcoin trading plans in video format. You get them, and if you want to, you can follow them, right? It's up to you. We've got a group chat there as well, which you get access to upon joining, and we're ending that group in May. So your time's kind of running out there. If you want to see the results before joining, you can do so. It's a transparent PDF document. Guys, thank you for watching. I hope you enjoyed, and I'll catch you soon.